How y'all doing, good people? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. A lot of scamming going on out here, guys, especially with what's happening with the stock market, what's happening with crypto, what's happening with real estate, what's happening with precious metals. Everything is up. And then scammers, they latch on to that, right? They latch on to our impatience. They latch on to our lack of financial literacy. And they latch on to our need for instant gratification. They use those things to scam us. So please, exercise some patience. Exercise some delayed gratification. Exercise common sense. If it sounds too good to be true, it probably is. You know what I'm saying? If it sounds too good to be true, it probably is. Oh, I'm gonna give you 100% return on your money in a month. Oh, send me $3,000 and I'm gonna get you a $30,000 income stream next month. Come on, guys. If it sounds too good to be true, it probably is. So please be careful with scammers out there. A bunch of them out there lurking around. A lot of them pretending to be me on Instagram. A lot of them pretending to be me on Facebook. A lot of them just pretending to be me on X. They're pretending to be me. I ain't even got that many people following me on X. I got about 4,000 people on X, and I'll be doggone if you ain't got scammers on X saying they me too. You got people on Facebook saying they me. You got people on Instagram saying they me. It's just crazy, right? So please be careful out there, guys. One thing you will know, and I guarantee you this, I'm not going to tell you to send money to me to invest for you in nothing, because I don't do that. I invest for me, myself. I talk about what I invest in, and you have the ability to invest for yourself based on what I'm investing in, if that's what you want to do. But far as you sending me money to invest for you, that'll never happen, because I don't invest money for nobody else but myself. I'm not a financial advisor. I'm just a guy on YouTube that has 30 years worth of experience building wealth on his own. That's what I talk about on this channel. I'm not an investment advisor. I'm not a CFP. I'm not a CPA. I can't answer your tax questions. You got to go to a CPA to get your tax questions answered, or a tax advisor. That's not me. See, I have a CPA that I go to. So I don't have to go to nobody and ask them no questions about taxes. I just go to my CPA, who I've had for 25 years. I don't need to be the expert. He's the expert. He's kept me out of the weeds for 25 years. So all I'm telling you guys is, be careful out here. It's a lot of crazy stuff going on with these assets doing what they're doing, with the Fed getting ready to reduce these rates and assets going to go higher. You ain't got to believe me. I'm just telling you what's going to happen. I'm just telling you what's going to happen. Like I said, I'm not Nostradamus. I can't predict the future, but hey, man, all you got to do is look at history. History will tell you pretty much what's going to happen in the future. Just look at history. Interest rates go lower, assets go up. Why? Because more people have the ability to buy assets when interest rates are lower, because they can borrow money. When people can borrow money at 3% and they can put it in an asset that's growing at 10%, you ain't got to be a rocket scientist to figure out people gonna do that. If I can borrow money at 3% and I get me a 10% return, that's a net 7% in my pocket. You ain't got to be a rocket scientist. You ain't got to be a Harvard-educated mathematician. You don't. That's what people do. If they're smart, that's what they do. When interest rates are low, I borrow money. And I take that money and I invest it in things that's going to give me a higher return than what I borrowed it for. So that's coming. The market is positioning itself for that run. The run is coming. Whether we want to believe it or not, it's coming. Y'all ain't seen nothing yet. We're going to talk about the S&P 500, guys. And the prediction where this thing going to be at the end of the year. It's going to blow your mind. Because I've been telling y'all since January, get yourself an S&P 500 ETF that tracks the S&P 500 index. When this thing was below 5,000 points, I was telling you guys this. Some of y'all listened. Some of y'all didn't. You don't have to be a rocket scientist to follow history. Just follow history of these investments. They go up, especially when interest rates are getting ready to go low. They go high. Interest rates go low, assets go high. I don't care if it's real estate. I don't care if it's stocks. I don't care if it's crypto. I don't care if it's precious metals, collectibles, antiques, memorabilia. I don't care what asset class it is. Audience. Yeah, audience is an asset class. It's the 8th asset class. Right. Audience is an asset class. It goes up in value when interest rates go down. It does. Right. We're going to talk about that. A couple things I got to get out of the way before we get going. If you want to follow me on Instagram, guys, when I'm not on the YouTube channel here, when I'm not doing live streams, when I'm not doing edited content, you want to keep up with me, see what my lifestyle is like. Because I don't really show a whole bunch of lifestyle on the YouTube channel anymore like I used to back in the day. That's being done on the Instagram page. Follow me there. Get down to the description box. There's a Instagram link down there, Richard Fain Millionaire Mentor. Follow me on Instagram. I got a couple 4,000 so, but y'all know from the old days I had a page that had 90,000 followers. We shut that page down. Richard Fain 28 page was shut down. So now we got this new one, Richard Fain Millionaire Mentor. We're going to build that thing up to 100,000 followers. I guarantee you that. It's going to get there. And we're going to have some fun over there. So if you want to follow me when I'm not on YouTube, you want to keep up with me, get down to the description box and click on that Instagram link. Give me a follow on Instagram and then send me a DM to let me know you're rocking with me. I certainly would appreciate that so I can say thank you. Second thing, website, www.richardfain.net. Second link down in the description box. Website is full of digital products, man, to help you get to your pot of gold at the end of the rainbow. That's up to you, though. Hey, man, a lot of people have been over there. Over 150,000 people have been to the website over the last couple months. All organic. I ain't buying no advertisement on Facebook or Instagram or on YouTube or nowhere else. It's just me talking about it on my YouTube channel, and that's where it always will be. I'm going to talk about my website every day on my YouTube channel, and people just got to get used to that. I mean, most of y'all don't really care. Some of y'all go over there and check it out. Some of you don't. Some of y'all got a problem with it. Well, of course, you know, we're going to always have a problem with something in this life, right? But my job is to do one thing, provide information. And that website will give you the information you need to get to your wealth. 10 fantastic digital products. Go check them out. www.richardfain.net. If you want to be mentored by Richard Fain, I got a private mentorship club through the website. You got to sign up for it. It is a paid membership. Yep, yeah. Nothing in this life is free, guys, right? I don't get nothing for free. You probably ain't gonna get nothing for free either. And if you do get it for free, we probably wouldn't appreciate it, right? So private mentorship club, if you want to be mentored by me and be around another 600 or so people in the group, in the club, get yourself over through the website, hit that join button, hit that membership button, sign up, and immerse yourself in this new community that we're creating. And then you got access to me, of course, for the mentorship. You can direct message me as much as you want on all of your financial topics. And of course, if I got experience and I got, knowledge of it, I'm going to share my opinion. If I don't, I'll point you in the right direction, right? But you got me in your gang of 5. You got me on your financial team. Plus you got another 600 or so people on your financial team that's already in the club, that have already made that investment in themselves, and they're enjoying that camaraderie, that team, that financial team approach that we have over there. And tonight, matter of fact, we're gonna have our 8 p.m. Eastern time private live stream, Q&A style, where everybody gets to ask questions and we do rapid fire. And we do it every single week. You know, we do it every single week, and it's been great. I love it. And I spend probably about 2 hours on that private live stream, just rapid fire Q&A, right? I spend 2 hours and we just have a good time, gather some information, get ourselves ready to go for the week so that we're in the right mind frame to build wealth. Because guys, this is going to be an incredible week. Don't miss it. It's an incredible week to build wealth. Incredible. The market is already moving up. Today, we got some good data last week, and right now FOMO is moving back into the market. Optimism is moving back into the market. You got a well-known Wall Street firm just came out and said Tesla's going to hit $2,600 per share by 2029. Y'all know I'm a Tesla fanboy. It's in the Mag 7. Y'all know if Tesla go to 2,600 a share, man, that's gonna be mayhem for me, because I'm gonna be even more rich with Tesla than I'm gonna be with NVIDIA. I mean, I already got Tesla, and I'm a long-term guy in Tesla, and I'm buying Tesla through the Mag 7. So if it go to 20, I don't know if it will. Hey, I respect Kathy Wood. She's a Wall Street savant. I mean, if Kathy Wood say they investing in it, guess what? I'm investing in it. I ain't hating. Listen, this lady got more resources than me. I'm not gonna argue with Kathy Woods. This lady a billionaire. What am I arguing with a billionaire for? I ain't a billionaire. but that's what we like to do, right? We want to argue with the billionaires. We ain't billionaires, but we want to argue with them. Guys, they made their billion some kind of way. They gotta be right at some point, right? So Kathy Woods is saying Tesla gonna get $2,600 a share. And I'm thinking, my goodness, this is just crazy what's happening with this wealth. Especially through the stock market, man. And crypto, oh my God, crypto is bananas. Crypto is bananas right now. And y'all know I think crypto is a pump and dump, but it's bananas. We're gonna talk about that too. We're gonna go through that. We're gonna go through this opportunity with Tesla. Just hang in there. We're gonna go through it. But let's get this business out of the way. So the website, like I said, get over there to the website, www.richardfain.net. Get them digital products, but more importantly, get yourself in that paid mentorship group, right? Put some skin in the game. You ever heard that saying, man, you know, you got to put some skin in the game. You got to have skin in the game, guys, for it to make sense, right? Anything that somebody's willing to give you for free, a lot of us ain't gonna appreciate that, right? But when you got to put some skin in the game, I think that's when the rubber meets the road. At least for me, it does. So that's the website. Join the mentorship group if you want to be mentored by me. I'm not answering any questions through email if you're not in the mentorship group. So if you send me emails about questions, if it's not related to the mentorship group or if it's not related to Moomoo, I'm not answering any more questions just out in the wild. You got to be a part of the mentorship group, because that's who have made an investment in themselves. And I can't cheat these folks by doing all this Q&A stuff outside of the group. But they've made the investment. Nobody else don't want to make the investment. So no more of that. And I've been telling you guys that for weeks on this channel. So don't get upset with me. You can watch the videos, get the information for free, and then go figure it out. Or you can get yourself over to the paid mentorship club, and then you got me as a resource, and you got another 600 folks over there as a resource to help you do what you need to do in order to get this pot of gold at the end of the rainbow. A lot of people are emailing me saying, should I wait? Should I get in the market? Should I wait? I'm not sure what are we waiting on? Every time I get that question, I'm asking myself, what in the world are we waiting on here? What are we waiting on? We'll talk about that too. So last thing, Moomoo, my self-directed brokerage app that I'm using over the next 10 years to quadruple, not even triple anymore. I done throw that out the window. See, y'all see I keep stepping my game up. Remember, I started out, I'm a double the net worth. 2 months ago, I'm a double the net worth. Now all of a sudden, like a couple weeks ago, I went to tripling the net worth. I didn't even throw tripling out, guys. I done put quadruple the net worth. I'm talking about 4X in the net worth. Because what's happening right now, there's no reason why Richard Fain, I know I'm talking in the third person like I'm some famous person, but I'm not. Still be Richard Fain, myself, I just think I can quadruple this thing. Based on what's getting ready to happen here, guys, over these next 10 years, I think I can quadruple this thing. I think I can actually quadruple my net worth in the next 10 years, which is insanity. But I think what we're going to lay out today backs up the quadruple instead of the triple. I'm going quadruple right now. So the Moomoo brokerage app is what I'm going to be using. When I get off this call today, when I get off this live stream today, I'm go to the Moomoo app and I'm buying the Magnificent Seven. Buying them. Well, Richard, how are you buying them? You buying them in an ETF? You buying them in individually? I buy them in individual stocks, man. What I do is I take the money that I'm investing, I divide it by 7, and then I just buy whole shares, and then I buy the rest of it in fractional shares until the whole kit and caboodle in the 7 stocks. That's what I do on the Moomoo app. Every single month, right? Same with NVIDIA. Every single month, same thing, same process. Put a certain amount of money in there, boom, buying, right? Same thing with SPLG and FTEC. So that's the game plan, right? But I'm using the Moomoo brokerage app to do that. If you want to rock with me, for you beginners who are just starting this journey, I don't care if you're 18 or 80. If you're just starting this journey, you're brand spanking new, the Moomoo brokerage app is going to be a valuable resource for you, in my opinion. It's been a valuable resource for me. Now, for you folks out there that are already doing your thing and you got your own brokerage accounts and you're doing your own, keep doing it. Nobody ain't stopping you. Keep doing it. This is really directed at the folk who want to use the same brokerage app as me because they're going to need some help. For you guys out there that don't need help, you're good to go. You keep doing what you're doing. But for those folks that actually need help to learn how to use a brokerage app, it makes sense for you to open the Moomoo brokerage app because I don't know nothing about nobody else's brokerage app. So you can't email me and say, hey, Richard, I got a TD Ameritrade brokerage account. How do I use it? I have no idea because I don't have one. I don't use TD Ameritrade. I use Moomoo. So if you want to rock with me and use the same brokerage app I use so that when you open the Moomoo brokerage account, you put $100 in there, they're going to give you 5 free stocks. TD Ameritrade ain't going to give you 5 free stocks. When you put $1,000 in your Moomoo brokerage account, they're going to give you 15 free stocks. All this is a limited time offer, guys. It ain't going to last forever. And you got to put the money in right away so you can lock in your free stocks. TD Ameritrade, none of them other ones, Vanguard, none of them ain't going to give you no free stocks. Don't get me wrong. They're great brokerage apps and they're great brokerage firms and they're giants and they do well, but they're not going to give you nothing free. No, they're not. No, they ain't gonna give you nothing free. Sorry. They didn't give me nothing free when I opened my Vanguard account 4 years ago. When I moved all my 401ks from my banking days, I moved them all over to Vanguard and they've been great. I love Vanguard. They gave me nothing for free. Nothing. Why? Because they're a 900-pound gorilla. They don't have to give you anything free. They're probably one of the #1 brokerage firms in the world. Why would they give you anything free? They wouldn't. So, Moomoo, dude, they're going to give you 5 free stocks. When you put $100 in your account and you're serious about starting to use that brokerage account, they're going to give you 5 free stocks. If you put $1,000 in there and you're serious about using that $1,000 to build wealth, they're going to give you 15 free stocks. That's a limited time offer. It won't be forever. If you want to rock with me, get down there and then click on that Moomoo link. That's my personal Moomoo link. Nobody else don't got that link but me. It's my personal link that if you go through me, you're going to get up to 15 free stocks when you put money in the account. Here's the really good thing about it for you beginners, you new people, guys, that's who I'm talking to. Just new people, beginners, 18 to 80 who want to build wealth. 18 years old to 80 years old. If you want to build wealth, just the new people, not to you old pros and experts, because I know we got a lot of old pros and experts in here. You don't have to you can turn down the volume on this part of the live stream if you want to. Just turn the volume down, and in about 2 minutes you can turn it back up. Turn the volume down if you don't want to hear it. But here's the thing for you new people. Listen, I'm gonna send you some tutorial videos. What you do is when you open your Moomoo, when you click on that link down in the description box, you open up your account. You go ahead and fund it. You're gonna send me an email through my website, www.richardfain.net. Second link down in the description box. You're gonna send me an email and say, Richard, I've opened my Moomoo account. I'm ready to start building wealth. Send me the tutorial video so that I can learn how to use the Moomoo app, because Moomoo's the expert, not me. Don't email me and say, hey, they want me to give them my checking account information. Guys, you got to get money on the account some kind of way. What are you gonna do? Send them a check? They don't take checks. This is how you put the money in there. Yes, go ahead and do it, right? But that will be in the tutorial videos. So to learn how to buy a certain stock, to learn how to buy a certain ETF on that brokerage app, you got to learn. And the way you learn is through those tutorial videos I'm going to send you. I'm just going to send them to you, and they're very good. They're done by Moomoo. They're very good. Plus, I'm going to send you what I'm doing. I'm going to send you my Wealth Transfer Blueprint 1.0, 2.0. That's going to outline all the investments that I make. Not that you have to follow what I do, but it gives you an idea of what I'm doing since you're brand new and you just getting started at this. A lot of y'all are brand new. And guys, I'm a traditional investor. I'm going to go by the traditional way of investing, which is long-term, dollar cost average, big boy, blue chip. That's it. I'm not doing no funny stuff, right? I'm not doing no options trading. I'm not doing no day trading. I'm not doing no Forex trading. I'm not doing no whatever all these people be doing over here who I'm not doing any of that. All I'm doing is taking a certain amount of money every month. I'm putting it in big boy, blue chip paper assets and letting it ride 10 years. That's what I do. Right? That's the most effective way for Richard Fain, myself, to build wealth. And for millions and millions and millions and millions of other folks that do it the same way I do it. So if you want to rock with that, 18 to 80, it's not too late. Get down in the description box, click on the Moomoo link, open up your Moomoo account, put some money in it, get you some free stock, and then send me that email through my website, and boom, you're off to the races. And then what do? You plug in every day to these videos, these live streams. You plug in every single day. You make that part of your priority list. It should be high on your priority list to financially feed your filter system. How do you do that? Because every day I'm on here giving you what's current in the market. And say, I'm not in here talking about pop culture. I'm not in here telling you, go ahead, Lil Wayne, baby mama said that, no. I don't care nothing about Lil Wayne and his baby mama and all that other stuff. I love Lil Wayne, he's a great guy, but I don't really care about what Lil Wayne lifestyle like. What I care about is how do I get to my lifestyle? How do I get to my pot of gold in the rainbow? Wayne already had his pot of gold, and it got a lot of gold in it. So ain't no sense of me spending my time worrying about Lil Wayne and what's going on in his world. Ain't no sense of me spending my time worrying about what's going on in people that are already rich lifestyle. I need to figure out what I'm going to do with my lifestyle. So when I'm 50 years old, 60 years old, 70 years old, I'm now out here working. See, that's our problem. We want to spend all of our time worried about Lil Wayne. We want to worry about, we spend all our time worried about, what the lady name, Cardi B. We would worry about all our time worried about other folk business that's rich. And boy, we will get on social media and spend our whole day fighting for somebody else's lifestyle, but won't spend 1 hour to watch information to fight for our lifestyle. That's the crazy part, right? So my thing is this. Get yourself down in the description box. Click on that Moomoo link. Get that free stock. Get yourself in a position, lock and load. Get this free information that I'm going to send you. I'm going to send you this free tutorial information, guys. But please, guys, you got to dial in. You got to lock in. You got to give financial education at least 1 to 2 hours a day of your life. You got 24 hours in a day. Please give financial freedom and financial literacy 2 hours a day. That's all you need. And then just implement what you learn. You need to be plugged into this channel every single day, whether it be live or delayed. Richard, I can't catch you at 10:30 a.m. Eastern time because I'm working. But when I get home and I settle the kids in, I feed them, I put them to bed, instead of me getting up here watching reruns of Martin, instead of me watching reruns of some sitcom of rich people, I'm gonna sit here and watch Friends rerun. They make $1 million an episode, guys. Even in the rerun world, they make $1 million an episode. What you watching them for? And you dead broke. You need to be watching something that you ain't broke. Stop watching stuff where people are already rich and you broke. Find something that can help you get rich. Okay? All right, let's keep moving. Let's dive into this opportunity. Let's continue the discussion that we started yesterday, right? We started this conversation yesterday on Sunday, Father's Day, about this opportunity, this once in a lifetime opportunity. We started that conversation yesterday. We're gonna dive more into that conversation today. And here's what we're gonna start with. We're gonna start with the Fed and how the Fed impacts stocks, crypto, real estate, precious metals, everything. How does the Fed affect all of that? We're going to talk about that. Here's the headline. Latest inflation data provides potential for even greater upside in the stock market rally, aka wealth, plus crypto, plus real estate, plus precious metals, gold and silver, right? So here we go. After a rough start to 2024, the latest inflation data may very well mean more fuel for the current stock market rally and all them other assets I talked about. Not just the stock market, guys. It's all these assets. Inflation coming down signals to the Fed, reduce interest rates. Interest rates go low, assets go high. I don't care what asset it is. It goes higher. Why? Because now people got ability to borrow money dirt cheap and buy more assets. And the asset is going to generate enough wealth more than what they're paying for the debt. Right? So I keep telling y'all guys, when rates come down, people borrow money and put them in assets if they're smart. I'm one of those people. I did it for 30 years. I did it with my credit cards. I did it with my 5-to-1 leverage in real estate. How do you think I built my wealth? I built my wealth by leveraging every financial tool I had. If you go on my YouTube channel right now and go to my playlist, you'll see a playlist called Credit Card Arbitrage, where I got 14, 15 videos that walks you through how I use my credit cards over the years to build wealth without paying a dime worth of interest. Not one dime worth of interest. Credit cards. It's on my YouTube channel. All you got to do is go look at it. If that's something you're interested in. But that's how you use your financial tools. Now, I'm not telling anybody to go get on their credit cards that don't know what they're doing. No, because I get people that email me all the time and I have to refer them to the playlist because it's in the playlist. Everything I did is in the playlist. No sense in me having a course on it when you can go to the playlist. It's about 14 or 15 videos. And here's a little pro tip. Start at the oldest video and work your way up. Because them older ones from 2020, that's when I was on the whiteboard Writing out everything. I don't do the whiteboard no more. So go to them old ones and then work your way to the new ones. Them old, I'm talking about from, they got 200,000-300,000 views on them because people jumped all over them back then, right? Because they never heard nothing like that. Nobody had never heard of that until I brought it to YouTube, right? This credit card arbitrage thing and the way I do it. Now, other people do arbitrage, but I'm talking about the way I did arbitrage with the credit cards. But I bought plenty of real estate that way. I bought stocks that way that I flipped and made money. I had a retail strategy that I used my credit cards to finance, didn't pay a dime worth of interest on them. Used the credit cards to finance my retail strategy, which was luxury watch sales. I got that playlist out there too, how I built a side hustle, making $100,000 a year flipping luxury watches online while working a full-time job in banking and running a real estate portfolio. All of that stuff is on my YouTube channel. We got to just spend the time to go find it. It's in playlists though, if you go to the playlist. I've been on this thing a long time doing a lot of stuff, man. Them early days on YouTube is where I was really, really down in the nitty gritty, telling you about the side hustles. I don't have to do that anymore. I don't have to flip watches online anymore, right? I don't have to use credit card arbitrage anymore. But in them early days, that's what I did when I was building my wealth and I was just starting this YouTube channel. So if you're interested in that stuff, go check it out. But here we go. After a rough start to 2024, the latest inflation data may very well mean more fuel for the current stock market rally. Bring it on, baby. Bring it on. Inflation falling continues to be one of the primary factors behind the bull market in stocks. Here we go, though. Here we go. This is what I want y'all to understand, and don't miss this. Please do not miss this. We are in the early stages of this bull market. We ain't even at the peak yet. We at the valley. We at the beginning. We at the beginning stages of this tremendous 10-year bull market run we're going to get ready to have. Now, that doesn't mean we won't have some red days. We might even have a correction within the bull market, which is not uncommon, guys. Go do your history. Go do your research. It's not uncommon to have a correction or two in a bull market cycle. It's not uncommon. So don't, oh, this guy on YouTube is an idiot. He said we're in a bull market. The market just corrected itself 10%, 15%. This guy doesn't know what he's talking. See, you don't know your history. Go do your history, man. Even in a bull market, you will have market corrections. That doesn't mean it's not a bull market. Listen, we're at the beginning stages of this new bull market. This bull market 2.0. Because some people can argue this bull market started in 2009. There can be an argument made for that. And since 2009, we've had many corrections. But some people believe 2009 started this bull market. I'm not going to disagree with that, but I will make this caveat. We're in 2.0 version of it right now. 2.0. Because I made a lot of money since 2009 to 2019. I killed it. Real estate, stocks, side hustles, killed it. So 2.0, I would say where we're at right now. But we're in the beginning stages of 2.0. I think so. Inflation falling continues to be one of the primary factors behind the bull market in stocks. This is what one of your lead economists, your lead strategist is saying. Evercore, ISI's equity derivatives and quantitative strategy. Boy, that's a big old fancy title for a guy who talks about stocks. Talks about making money, right? This guy on Sunday, this Emmanuel guy, must be a really smart guy, right? Boosted his year-end price target for the S&P 500 to 6,000 points. Yes, sirski. Now, if you go back a year ago, not even a year ago, let's go back 6 months. Let's go back to January. Can somebody tell me what the S&P 500 was trading at in January? I'm telling you guys what's happening. You can come up with your own conclusion, but I'm giving you, I'm trying to paint this picture for you and put you in line and get yourself locked and loaded and get yourself off the sideline and get in the game. See, right now we're in the game. Some of y'all still on the sideline just being cheerleaders, but you ain't in the game. You got to get in the game. At the beginning of the year, what was the S&P 500 trading at? Beginning of the year, I know the number. I'm just trying to see if y'all awake in here. I know it's early, it's on a Monday. But this week is important, guys. We gotta get right. This week is important. Okay, forget it. I'm gonna give it to you. It was under 5,000. It was under 5,000 points in January. What is it today? It's around 5,400 points. Now, there are predictions. This thing is going to go to 6,000 points by the end of the year. It's already it done broke all types of all-time highs already. And we're still just in the beginning stages of the bull market, right? 2.0. That's what this gentleman is saying. On Sunday, Emmanuel boosted his year-end price target for the S&P 500 to 6,000 from 4,750. The beginning, he said 4,750. Now he's had to come back and correct this thing to 6,000. That's a lot of net worth, guys. Had you been in the S&P, the beginning of this year, you'd be up 10, 12% right now. I'm up 14%, which I shared with the group yesterday. I'm up 14% on my S&P 500 ETF. See, I've captured all of this upside. Why? Because I'm in the market. I'm not trying to sit on the sideline and time the market. I'm in the market every single day. So I get to experience all of this. I get to capture all this growth because I'm in the market every day. $6,000. What if we get to 6,500 by the end of the year? Another 1,000 points on top of where it's at today. We're already at 500 points 6 months through. What if we get to 6,500? And you sitting around on the sideline waiting for some catastrophic event. Keep telling y'all, man, don't miss this bull market by sitting on the sideline thinking, oh, it'll go lower. I'm going to sit here and wait till the S&P go back down to 4,500 points. That's when I'm going to get in. It may never go back down to 4,500 points. Have you ever thought about that? Listen, guys, time in the market is more important than trying to time the market. Just get yourself in the market and ride it. If it does have a correction, guess what? Keep riding it. It bounces back. Give me one time in history it hasn't. Please, anybody, I got time. Give me one time in history of the stock market. Give me one time in the history of real estate. Give me one time in the history of precious metals, gold and silver, that it didn't bounce back and it wasn't better. One time, please, anybody. Give me one time when assets didn't come back stronger. I don't know, I'm waiting. Please, anybody give me one incident in history where the stock market didn't bounce back at an all-time high. Give me one incident in the history of the S&P 500 that it corrected itself, but it didn't come back bigger and better and stronger. Please, anybody, I got time. Because a lot of us think this is a scam and it's just rich people. It's just, no, rich people just know how to make money. And they always have their logical thinking cap on, not their emotional thinking cap. That's why rich people get richer. That's why they control 99% of the wealth in the United States. 1% of the people control 99% of the wealth because they understand how this thing works. Right? It's always came back better, guys. I don't care what period you talk about. You can talk about the 29 depression. You can talk about what, the 48, 38, 48. You can talk about World War II. You could talk about 2000, the dot-com bubble. You can talk about the Great Recession of 2008. You could talk about the pandemic recession of 2020. You can talk about the major correction in 2022. I don't care what you talk about, guys. The S&P is higher today than it's ever been. How's that happen? The Dow Jones is as high today as it's ever been. How did that happen? The NASDAQ, high as it's ever been. How did that happen? If it's all a scam, if it's all, oh, it's just make-believe, okay. Keep on, sit on the sideline. Get yourself in the game, guys. Put yourself in the game. Let's keep moving here. Emmanuel cited the promising inflation path and the early innings of an AI trade when moving this year-end target to the highest on Wall Street. Here's the catalyst, guys. Over the next 6 to 10 years, this AI thing, this artificial intelligence monster, is predicted to add, over the next 6 to 10 years, $3 or $4 trillion worth of mucho dinero. Somebody got to capture that. Somebody going to capture $3 to $4 trillion just from the AI market. Somebody got to capture that upside. I'm going to capture it. I'm going to get my piece. I'm going to get my piece of that $3 to $4 trillion over the next 6 to 10 years that this AI revolution is getting ready to thrust upon us. It's a new era. I spoke about this yesterday. You can be stuck in 1950 if you want to. We moving forward. Stay back there in 1950. Stay back there in 1970. Stay back there in 2000. Stay back there in 2010 if you want to. Time don't stop for nobody. Because if it did, I'd still be 26 years old. I'm 56. Time, please stop. It won't. Cross your fingers. Whatever you want to do, time is not going to stop for you. And innovation is a part of advancing our culture, advancing our world. It's going to happen. I might as well be on the upside end of it, right? I'd rather be on the upside end of what's getting ready to happen because it's going to be major. And a lot of it is going to be fueled by artificial intelligence of some of your largest companies in the world. Here's the thing, it's a trickle-down effect though. So not only your large cap companies are going to take advantage of it, but then it trickles down to your mid-cap companies and your small cap companies. Nobody wants to miss out on this, guys. You can see what your top 7 tech companies in the United States are doing, positioning themselves to take advantage, grab market share. Think about your cloud services companies like Amazon, Alphabet, Microsoft. These are your cloud services companies. They are doing everything in their power to build out their AI cloud platforms. I'm just telling you guys, why do I invest in the Magnificent Seven? That's why. That's why. Because those 7 tech companies, they're going to grab a lot of this market share, especially NVIDIA. They're already on the hardware and the software side of this thing. They got both ends. They got product coming out over 26 and 27. That's crazy product. Revolutionary stuff. And the competition, Intel, Advanced, whatever the name of the company, AMD, they're coming. They're pushing NVIDIA. You got giant companies like Amazon. You got giant companies like Alphabet, Microsoft doing what? Pushing NVIDIA. Competition. This thing is going to explode, guys. And if you're not part of it, you're going to miss a wealth transfer opportunity. That's what this gentleman is talking about. The reason he upped his target price for the S&P is because of this tremendous opportunity that's happening in artificial intelligence. We've not seen anything like this, guys, where you see the S&P, without interest rates even being down, jump 400-500 points in 6 months. Had you been invested like I was recommending back in January, you'd be up on this thing. Had you been invested in this information technology, FTEC, that I mentioned all the time, you'd be up about, what was I up? 25%? I think it was 23%, 24%, something like that. Year to date, I'm up about 24% in FTEC. I'm up about 36, 37% in the MAG. And that's before even Apple started its climb back to the top. Can you imagine what it's going to be like next quarter, at the end of the second quarter, when you got the Apple results that come in? Probably go to 40% year to date once Apple kicks in. Apple just started to got their head screwed back on, and they start to get crazy again. Over $210 a share, killing it. Now you got Microsoft, you got Apple, you got NVIDIA doing what? Competing for the most valuable company in the world. That's competition, baby. That only benefits a guy like me. See, I love that competition between these giants. I want them to push themselves to the limit. Why? Because it makes me richer. I don't want them to be complacent. I don't want them to be sitting at the top alone where they get complacent and not aggressive. I want them always on their tippy toes, aggressive, thinking, golly, NVIDIA's right on my tail for #1 company in the world. Oh my God, Apple just passed me. I got to get on my game. See, I want that. And that's what you're going to get with this artificial intelligence renaissance. So here we go. Let's keep moving. The S&P 500 and NASDAQ hit 4 straight record closes last week as investors digested softer than expected inflation readings for both consumer and wholesale prices. What are they talking about? They're talking about the CPI inflation report, and they're talking about the PPI inflation report. Both of them came out showing, this was last week, guys, if you're paying attention, showing that inflation is coming down. Can you say FOMO? Can you say enthusiasm? That's what's happening, right? FOMO enthusiasm is happening. So I love that, right? That's why I tell you guys, this week is a really good position week. We should be opening up our Moomoo accounts. We should be funding those Moomoo accounts right now. We should be opening them up and funding them. Get down to that description box, click on that Moomoo link. Get your account open today. Put you $100 in it, you get 5 free stocks. You put you $1,000 in it, you're gonna get 15 free stocks. Now you're ready to learn. You're gonna send me an email. Richard, I've opened up my Moomoo account, I funded it. I need you to send me those tutorial videos and send me your blueprint 1.0, 2.0, so that I can get off to a fast start and take advantage of this amazing opportunity to build wealth. You got to send me the email through my website, www.richardfain.net. Second link down in the description box. So let's keep moving. Let's continue this conversation about assets, right? Whether you want to plug in stocks, you want to plug in real estate, you want to plug in crypto. Hey, listen, real estate market across the board, I'm talking about across the United States, is up about 5% this year. I don't know, guys. So if I bought a $500,000 property in January, guess what? I'm up 5% on that property already. Guess what else is up? Rent. Not only am I appreciating the property in the first 6 months, I've gotten another $25,000 in appreciation. I'm also getting appreciation in my rent. I don't know. Why would I buy real estate at all-time high prices? Because you got less competition. I don't care what they're asking for the property. I'm gonna go in and offer them what I think it's worth. They take it or leave it. Nobody else ain't offering you nothing. The best time to buy real estate, guys, is when you got no competition. The worst time to buy real estate is when there's more competition. Competition runs the price up. You do know that, right? We'll talk about that in a second, though. Let's get back to stocks real quick. The S&P and NASDAQ hit 4 straight record closes last week as investors digested softer than expected inflation readings for both consumer and wholesale. So those reports came out and it showed that consumer price index, Inflation's coming down. And then business price index, basically, right? PPI, producer price index, showed that wholesale prices are coming down. So not only the retail prices are coming down, but wholesale prices are coming down. Pretty good stuff. Consumers and businesses are seeing prices come down year over year, month over month. Great. Love that. That does nothing but signal to the Fed what? Let's get them interest rates down. Right? UBS Investment Bank's chief U.S. equity strategist, who holds one of the highest S&P year-end targets on their street at 5,600, believes this week's inflation data and what could mean for eventual interest rate cuts provide the potential for even greater upside to his year-end outlook. Why would I buy stocks when they're trading at all-time highs? Let me just read you this a little bit so that you'll figure it out. Why would I buy stocks, Richard, when they're trading at all-time highs? Because you have a greater upside. See, nobody wanted to buy, I ain't gonna say nobody. A lot of people didn't want to buy the S&P when it was at 49.50 at the beginning of the year because they thought it was going to go back down to 45. Guess what? Wrong. It's a hair under 5,500 points. See? Because at that time, it was traded at an all-time high. Remember, in January, at the 49, it was trading at an all-time high. Why would I get in and it's at 49? That's an all-time high. Why would I get in? Why would I get in at an all-time high? Why? Right here. Greater upside. See, 4,900 was an all-time high in January, but we had greater upside. Now we're at 5,500 points, dang on near. 54. Let's just say 54. I don't know, guys. Why would I get into the stock market? Because I'm looking for greater upside. There's greater upside coming. Now, why would I sit on the sideline with my fingers crossed that it go back down? I wouldn't. I just get in and get this greater upside. Oh no, Richard, 5,400 is too high for the S&P. I'm gonna wait till it goes back down to 5,000 points. Okay, what if it goes to 6,000? You're gonna be looking stupid. Just being honest with you, right? Golub's confidence is increasing because inflation is showing its most significant progress towards the Fed's 2% goal since the start of the year. That is fueling hopes for rate cuts and sending Treasury yields, a noted headwind for stocks over the past year, lower. Keep telling y'all, the headwind, basically what's keeping something from going forward, right? The headwind, you got a tailwind, which propels you forward. You got a headwind that keeps you from propelling forward. The headwind is U.S. Treasuries. Why? Because they compete for the same investors as the stock market. So when U.S. Treasuries are going up, that's a headwind against the stock market. When U.S. Treasuries are going down, that's a tailwind for stock market, right? So here we go. The May Consumer Price Index showed core CPI, which excludes volatile food and energy categories, increased by 0.2% month over month, the lowest reading since June of 2023, a year ago. Lowest reading. Meanwhile, core producer price index, wholesale, which excludes food and energy categories, was unchanged in May from a prior month, below economists' expectations of 0.3. Combining the various metrics, economists believe this points to a positive reading of the Fed's preferred inflation gauge within the personal consumption expenditures later in the month. So here's what we're setting up, guys. We've already got the CPI and we got the PPI. But now we got the big boy coming out at the end of the month, which the Fed really uses to gauge inflation, which is the PCE, right? Which is the Personal Consumption Expenditures Report. That's the one the Fed hangs its hat on. That's coming out at the end of this month. And if that hits a home run, whew, more upside More upside, greater upside. So if that hits a home run, and most people think it is because you've already got the two, if that one comes in really good, we got more upside. That's why I keep telling y'all, stop trying to time the market and wait for some magical number. Oh, should I get in NVIDIA? It's at 132. Should I wait till it goes back down to 120? What? What are you trying to accomplish here? What were you trying to be, like a stock picker? No, get in the thing on thing and ride this thing till the wheels fall off. That's what you do. That's what I'm doing. I don't care if it's trading at 132. Who cares? What I care is can it get to 1,032? That's where the money is at. The money ain't at 132, guys, not for a guy like me. The money is at 432, 532, 632, 732 a share. That's where the money is. That's where the net worth is. That's where the quadruple net worth is. Do you think I care if I buy NVIDIA at 132 today? No, I'd love to buy it at 132 today. Why? Because I believe it goes to 1,032. So it's very insignificant if I buy it at 120 or if I buy it at 132. It's insignificant. It doesn't matter. What matters is I buy in now so I can ride this thing to the future. Stop thinking about pennies and start thinking about thousands and hundreds of thousands of dollars worth of dollars. Stop thinking about pennies. 120 to 132 is pennies in our world. Not in the big boys' world because they're dealing with billions of dollars they investing. But when you're talking about people like you and me where we're putting $100 in, we're putting $1,000 in, we're putting $5,000 in, those are pennies. From 120 to 130 is pennies. It's not any real money that's going to do anything in our life to change anything. The real money comes when I can buy in at 130, 140, 150, 200, and this thing run itself up to $1,200 a share. That's the real money. If you want to participate in that, that's the real money. That's where you change something in your financial life forever. Forever. That's the reason I'm in the stock market, not to make pennies. Not to wait around and cross my fingers and hope that for some reason I'm gonna make more money if I wait till NVIDIA goes down to 115 a share. Oh, I'm gonna make more money. No, you're not. If you're you and me, the only way we make money is if NVIDIA 2X's, 3X's, 4X's, 5X's. Then we make a bunch of money. You're billionaires, yeah. They can get in at 120 and sell at 130 and make 3 or 4, 5, 10, 20, $50 million because they're dealing with billions of dollars. You and I are dealing with hundreds of dollars, thousands of dollars. That's no real money. If I put $1,000 in NVIDIA today at 132 and it goes up to 142, how much money do you think I'm gonna make? $10 a share. I only got 10 shares. I'm not gonna make any real money. So for me, it's about putting my money in NVIDIA, just keep putting it in and ride that stock price to $1,200 a share. Then I change something in my life, right? Then I change something, boy. I ain't got to work no more. Let me tell you something, man. If right now today, I went and sold everything I own. I'm talking about I sold everything I own. I'm living out of a shoebox. And I put $100,000 in NVIDIA at 132 a share. Let's do the math. I'm just trying to prove a point here and then we're going to move on. Let me find my calculator because I ain't that good with math. So I got $100,000. Here it is now. I done sold everything. I done sold a car. I done sold my Pokemon collection. I done sold my Star Wars collection. I done sold all my Michael Jordan tennis shoe collection. I done sold it all. I done sold it all. I'm living in a shoebox. I'm renting a shoebox. Going to work every day, living below my means, staying out of credit card debt, saving and invest. Got my little emergency fund, but I done sold all my material possessions. And I done gathered up me 100 grand. And I'm gonna buy this NVIDIA stock. And it's trading at 130 a share. That gives me 769 shares. Let's just say 770 shares of NVIDIA that I bought at $130 a share. I'm just trying to prove a point here to you guys. Because a lot of us got a misunderstanding of what's going on here. We're worried about pennies. All we're worried about is your little pennies. You need to be worried about real wealth. And this is how it's captured. So I'd sell everything. Pokemon collection, Star Wars collection, even my lifesavers. I got to give my lifesavers from 100 years ago. Luke Skywalker lifesaver. I sell that too. Right? I sell it all. Got me 100 grand, I buy me NVIDIA. Boom, I got me 770 shares at $130 a share. Right? I stay in this thing. Stock price goes to $500 a share over the next 3 years. NVIDIA kills it, knocks it out of the park, new innovation, 80% of the market share, killing it. Stock price goes to $500 a share. Okay, I take that $500 a share, I times it by my 770 shares. That gives me $385,000 minus my 100K, because that's what I put in it. I just made myself $285,000. I just made myself $285,000. See, that's real wealth, guys. This is what I'm talking about. I don't know what we're talking about. This is what I'm talking about. Let's just say it gets to $800 a share. So I take my $800 a share times 770. That's $616,000 minus my 100,000 I put in because I sold all my Pokemon collection, all my Michael Jordan tennis shoes. I sold all my Luke Skywalker Star Wars collection, all my baseball cards. I sold my watches, everything. I'm living in a shoebox for 3 to 5 years. Like my man Dave Ramsey said, I mean beans and rice. I mean beans and rice for 3 to 5 years, waiting on this home run. I mean beans and rice, living in a shoebox, then sold all my things to gather up enough money to put in this stock. Now I'm at a $516,000 profit in 5 years if this thing go to $800 a share. Let's say it go to $1,000 a share. $1,000 a share times what? 770? That's $770,000 minus out my 100. 770 minus my 100, because that's what I put in. I just made myself in 5 years $670,000 by doing what? Patience, consistency, discipline. Sell all that crap because it ain't putting no money in my pocket. Sell all that crap that ain't putting no money in my pocket and put it in something. And I'm just using NVIDIA as an illustration. I'm not telling you guys to go out and buy NVIDIA. I'm just saying this is the power of what's happening right now if you want to take advantage of this opportunity. Right? If you want to take advantage of this opportunity. And my goodness, what would $670,000 do to someone's financial life right now? See, we gotta stop letting the trees keep us from seeing the beautiful forest. But we get bogged down on looking at the trees. We want to look at the trees. We don't even see this big old beautiful forest. This is what I'm telling you about what's going on right now with assets, guys. We got to stop looking at the trees and spend more time looking at the forest. The forest is where the beauty is, not just an individual tree. We got to stop worrying about pennies and start thinking like, I want to make hundreds of thousands of dollars. I want to make millions. I want to get to a point where I don't have to work for nobody no more. And if I can do that in the next 5 to 10 years and hit this thing like this, you tell me. That's the reason I've changed my financial goal from double or triple to quadruple because of that little illustration. I don't know if that'll happen, but goodness gracious, what I see happening right now, even before the Fed starts reducing rates, where more people are going to be able to borrow money cheaper and put more money into assets, which drive up the price of assets or the value of assets. Come on, man. So all I'm telling you guys, we got to start thinking about this. So here we go. Here we go. Let's talk about this real quick, and we're gonna wind this part of it out because I got a couple more things I want to hit you with. Bank of America. Here we go now. This is the same story we've been on, where we've got the $6,000 price projection for the S&P. 6,000 points. Started out the year below 5,000. That was an all-time high. And over the like they said, over the last, what they say, over the last 4 weeks or so, or the last weeks or so, we just been hitting all-time highs. Just keep hitting them, right? So here we go. Bank of America, U.S. economists, wrote Thursday, PPI supports their view that disinflation is the most likely path forward and points to a A+ report for May core PCE. See, what they're doing is they're projecting out what the PCE will be at the end of the month. This is Bank of America, big boy territory, right? Bank of America, U.S. economists, wrote Thursday, PPI supports their view that disinflation is the most likely path forward and points to a A+ report for May core PCE. B of A estimates core PCE increased 0.16 month over month in May. The May CPI and PPI data are favorable for our view that the Fed will be reducing its policy rate later this year. This is what Bank of America is saying, one of their big boys. We see recent inflation data as greatly reducing the likelihood that the Fed has to raise rates and view labor market data as indicating that the probability of fast rate cuts is also low. An easing cycle that begins in September and remains a possibility, particularly if shelter inflation were to moderate further in the next couple of months. We already know the Fed, if you've been paying attention, you've already know the Fed has went on record and said we're penciling in potentially 4 rate cuts in 2025. Can you imagine, guys, what the market has done in 2024 through the first 6 months? Can you imagine 4 rate cuts in 25, what that's going to do to assets? If that happens. I'm not saying it will. I'm just telling you what they put on the table. That there's a probability of 4 rate cuts in 25. Why are we waiting and on the sideline, hoping and praying something go the other way? I don't know why. See, I don't know why people think the only way they can make money in the stock market is when something got to go down and then you wait for. No, you can make money in both ways. You can make money right now on greater upside where the stock price keeps moving up, and you can make money if it does correct itself. You can make it both ways. So why do we gotta, the only way I can make money is if I buy it lower? No, you can make money both ways. I'm not saying you can't make great money when assets are discounted. You can. If you hold them long enough and they trade at a premium again, you can. But that ain't the only way you make money in the stock market. That's not the only way you make money in assets. You can make money in assets through just natural appreciation in the asset. That's all I'm saying. Don't close your eyes because I'm looking at the trees and I can't see the forest. Because that's what most people think, especially when they're brand new at this. They think the only way I can make money is I got to wait till NVIDIA goes back down to 120. I got to wait till NVIDIA goes to 115 before I can make money. No, you can make money right now. If you'd have jumped in on January 10th at 120, you'd be up right now by $12. That's money. You don't got to wait till it go back down. Now, you can, if that's what you want to do. You want to sit on the sideline and try to time it. Go ahead. Good luck. It's hard for retail investors to time the market. We don't have the financial tools to be able to know what's going on in the market. Why? Because we're busy working. See, I ain't got time to be sitting on my phone all day when I'm working. It's for somebody else to make them rich. No, when I'm working to make somebody else rich, that's where typically my attention is. I ain't got time to be looking at the stock market and see what's going on because I'm working to make somebody else rich. That's the thing that the 1% have tricked all us into in this country. 99% of the population work for the rest of their life to make 1% rich. When are we going to change that? Why? Because we can't see the forest for the trees. We thinking about pennies. No, think about real money, real wealth. That's what they do. That's what Nancy Pelosi did when she made $4 million off NVIDIA. I don't know. Y'all tell me. What did you think she waited for? To it to go back down in value? No, she jumped in because she knew it was going to keep going up higher. She was like, I ain't got to wait for it to go down. I'm going to make my money on the upside. And guess what she did? She made $4 million on the upside. While y'all sitting around here waiting around, oh, I'm going to wait till it goes back down. Guys, I tell you, you're going to stay broke. Get yourself in the game. Put yourself in the game. Got to put yourself in the game. For you beginners, that's who I'm talking to. I'm not talking to you people that, think you're an expert already. I'm talking to people that are beginners. Listen to me. Get in the game. Get in the game. We're not billionaire investors. We're just regular people that's trying to hitch our financial wagon to a thoroughbred. That's what we are. We're not stock experts. We don't have the tools that billionaires have and hedge funds have and institutional investors have where they can analyze and monitor these companies every single day, 300. No, we don't have that. We got an iPhone. We got to go to work to make somebody else wealthy. We don't have time to be monitoring stocks. We don't have time to be monitoring ETFs. What we got to do is say, okay, this looks like a pretty good company. Good history, looks like they got good momentum on their side, good product mix, good strong position from a market share standpoint. They are in a market or in an industry that is going to do $3 to $4 trillion over the next 6 to 10 years. Let's jump in this thing. Let me put my money in here and just let this thing go. That's what I do. I just put my money in there and let it grow with the company. I don't worry about nothing going back and going down in value. Now, if it does, guess what I do in that point? I just dip into my cash reserve and I buy a little bit more and wait for it to return back to glory, because it always does. Like I told you, anybody in here could tell me when the S&P has never recovered. Tell me when the Dow Jones has never recovered. Tell me when the NASDAQ has never recovered. I'm not talking about one individual stock. I'm talking about the indexes, which is the broader stock market. One time that the S&P 500 hadn't recovered and was stronger. You can't. Now, yeah, you can go through and poke at one individual company or two, but you can't. You cannot find a time in history where the S&P 500, the Dow, or the NASDAQ has not recovered from a correction and been stronger when they recovered. One time. Please help me out, because you can't, because it don't exist. All right, let's keep moving on. Let's take a look at the housing market real quick, and then we're gonna hopefully get to the days on the stock. But let's take a quick look at the housing market, because I've been wanting to hit this a little bit, because I still think there's an opportunity for some of us to take advantage of the housing market right now and get some good deals on rental properties. But we got to have the right attitude, right? So here we go. Competition in the housing market is cooling off. That's the headline. Competition in the housing market is cooling off. Here's why. And I want you to think about this from an investor standpoint, not an end user. Don't look at this as an end user. Look at this with your investor hat on. I'm trying to invest in real estate to build my wealth. Don't look at it, oh, this is my dream house. It's my dream house. No, none of that. That's not what we're talking about, your dream house right now. We're talking about how to make some money, right? Here we go. More homeowners are listing their homes for sale, but properties are taking longer to sell as potential buyers face high prices and interest rates. And y'all know I've been talking about this, right? I've been talking about this. Prices, even in the event of this, even that, prices are higher because of inventory, right? Prices are higher. New listings from home sellers jumped in May, up 13% from a year ago, according to the latest market report by Zillow. You have an increase in sellers coming back on the market. This is what Zellow's economist, senior economist, said. But with buyers not returning to the market, many new listings are just adding to inventory. The number of homes on the market rose 22% compared with last year, Zillow found. So you got a 22% increase. 22% increase in homes for sale. Let's just remember that. Homes are staying on the market for a bit longer because the sales are not keeping up with the flow of homes coming on the market. The market is slowing down. Almost 2/3 or 61.9% of homes listed on the market in May have been for sale for at least 30 days without going under contract, according to new analysts. According to a new analysis by Redfin. About 40.1% of homes that were for sale in May have been listed for at least 2 months without going under contract. The market is slowing down. Homes are taking longer to sell, and that allows inventory to accumulate on the market. Yet despite the recent jump in supply, we're still starved for inventory in the for sale market. Even with a 22% increase, guys, we're still nowhere near the level of inventory we need. We need at least 6 months of inventory. Less than 6 months of inventory is not ideal. We need more than 6 months of inventory. We're still not there yet. The housing inventory in the U.S. is still 34% below pre-pandemic levels. So still 34%. And a lot of y'all are asking, well, why are prices so high? That's why. Even with the rise, 22% year over year in inventory, we're still 34% lower inventory-wise prior to the pandemic. We're short nationwide of about 4.3 million homes. We're still in a housing unit deficit. As mortgage rates have remained high and housing affordability has strained household finances, buyers have been unable to enter the market. Buyers are facing these incredibly high mortgage rates, at least relative to what they were during the pandemic. Right? Homeowners might lack the motivation and financial ability to purchase a home. 30-year fixed rate mortgage rates in the U.S. slid to 6.9% on June 13th, lower from 6.99 a week prior. While mortgage rates could change pretty quickly or on a dime, buyers are unlikely to see big movement in the near term, while the Fed holds interest rates steady at June meeting and now anticipates just one rate cut this year. The next meeting is July 30th and 31st. So how is that an opportunity for me as an investor? Here's how. When I'm a seller of a duplex, when I'm a seller of a 3-unit, a 4-unit, I'm a seller of a single family, and my house, my units have been on the market 30, 60, 90, 120 days. I already know interest rates are against me because they're sky high. People cannot afford to buy nothing, not the regular schmegular person. You can't afford it. Rates too high. Only people are buying are the 1%, and people who have wealth accumulated through investing in assets that build wealth, and then that wealth can pay for a house. Those are the only people buying right now. But for an investor like me and you, if we got the money, if we got decent credit, if we can afford the high interest rate or pay cash, it's a perfect opportunity for us to go out to this marketplace and say, hey, Mr. Seller, Mrs. Seller, you've had this duplex on the market for 6 months and it ain't moved. I know you're asking X, and I know that's probably what the market says it's worth, but I'm a serious buyer. I'm willing to give you 20%. You give me a 20% discount off this price and I'll take this property off your hand. Those are the people that are winning, guys. See, why are they winning? Less competition. See, when I'm a buyer and I'm ready, I got cash, or I can afford to absorb this 7% interest rate and it not affect me, and I can still cash flow, I have all the power because I can go to 100 of these guys and gals and say, hey, which one of y'all want to play ball? Somebody in that 50 to 100 properties that I look at, somebody is going to have what? Seller fatigue. Somebody got to get off this property. Now, you may have a few of them that say, hey, man, go kick sand somewhere, bro. I'm good. I own this thing free and clear, and I ain't moving till the market come back. You'll have those guys and gals. But you also going to have them ones that say, you know, all my wealth is tied up in this thing. I done had something happen financially. I got to get rid of this thing. If you can give me 20% of what I'm asking and it's a easy closed deal, let's get it done. Boom. Now you just got you a property that's 20% below market value. You instantly got equity in the property. And you can put a tenant in it and continue to catch upside. Why would I catch upside, Richard? I'm going to tell you why you're going to catch upside. One, you've already heard the report. We got 4.3 million unit shortage. 4.3 million units. We ain't going to catch that up in no year or two, guys. No. We're a while before we catch that up. So what happens when the Fed start lowering those rates? Guess what's going to happen in next year in 2025 when you get potentially 4 rate cuts? That's going to bring the 30-year fixed rate down too, eventually. It'll lag, but it'll come down. As those rates come down from 6.5 or whatever it is to 5.5, guess what that's going to do? That's going to unleash a segment of buyer who's been pent up because they can't afford it at 6.5, but they can afford it at 5.5. With that lack of inventory, you've already bought. You already got 20% upside because you got a discount. Now, all of a sudden, you get this rush of demand. You may see another increase in that price or in the value of that property. Now, what if you see another 20% increase? Now you just made 40% on this property, 40% upside. You can sell it or you can keep it. You just made money. That's the way you use real estate right now, guys, to get rich. But you got to be well-heeled financially. You either got to have cash or you got to be well-heeled where you can go get 5-to-1 leverage and not worry about the down payment. You got the down payment. You can go in and get incredible deals, but you got to be financially in shape. You can't be financially out of shape to do this. Oh, I got a 445 credit score. Do you think I can? No, you cannot. Get your credit score up. You can't even go, don't even try it because ain't no bank gonna finance you. You got to get your credit score up. See, this is for investors. This is not for, oh, I want to buy my dream house. No, this is for investors who want to put money in an asset that multiplies it quickly. That's what I would be doing. If I was buying real estate right now for income, I'd be buying them up as fast as I can, waiting on these rates to come down, because when these rates come down, that demand is going to open up again. All of these people are going to flood in who couldn't afford something when rates were 6.5%, 7%. Rates get down to 5.5%, it's going to open up a whole nother person, a whole nother flood of people to the real estate market. I've already told you we're 4.3 million units short. We cannot make that up in 1 year. It'll take us 5 to 10 years to make that up. In that 5 to 10 years, you could be killing it. But you got to be in financial shape. You got to have cash, or you got to have the ability to be able to go to a big boy bank or a lender and get your loan, 5-to-1 leverage. Buy that property, negotiate you a 20% off somebody. How do I do that? Just make an offer on 100 houses. That's what I would do. I go right on Zillow, in my zip code, pull up everything I like, and then I get me a real estate agent and say, just make offers. Somebody gonna accept it. That's all I would do. I wouldn't go look at all of them. I just go look on Zillow, find the ones that I like, and I'd start making offers, subject to home inspection. That's all you gotta do. I'm subject to a home inspection. I ain't gotta go look at no 100 houses. I'm gonna look at them online. Write a contract subject to home inspection, subject to financing. That's it. If either one of those things fall through, I get out of the deal. Go on about my business. Other thing I would do if I don't got cash, the other thing I would do is get pre-approved right now. So when I'm dealing with these folks, I'm like, hey man, here's my pre-approval. I got $500,000 ready to go. But I'm not, you want 750. I need a 20% haircut. Give me a 20, 25% haircut and you got this 500,000, man, go on with that. Going on with the rest of your life. Or you can sit here for another 6 months and put money into this property and not sell it. That's up to you. So I just think there's an opportunity here for the right investor. If you're saying, hey, I don't want all my eggs in the stock market basket, you don't have to have them in there. Real estate is a great place right now to buy, man. Well, Richard, why ain't you buying real estate right now? I don't have to. What do I need to buy real estate right now for if I don't have to? I'm gonna make a bunch of money in the stock market. I already have, and I'm gonna continue to. And I'm gonna make a bunch of money in my businesses that I own. I got businesses that I own, and I got the stock market. I don't have to buy real estate if I don't want to. Not individually. I don't have to. It's that simple. Why don't you buy gold and silver? Because I don't have to. What do I got to buy gold and silver for? I don't have to. Why don't you buy crypto? Because I don't have to. I found my asset class that works well for me. I don't need to complicate my life. I can just buy what I get. But for those that want to diversify, diversify. Ain't nothing wrong. If you want to buy crypto, know what you're going on to. You know it's a pump and dump. Right now, you're on the pump. Just don't get caught with your pants down on the dump. And you're good in crypto. That's all. You just better know when to sell it because it's going to dump at some point. So if you want to buy crypto and that's your thing, just beware of the pump and dump, right? You're on the pump right now. At some point, there will be a dump. You just don't want to be holding the crypto when it's the dump. You want to buy real estate? Great time right now to do it. Don't do it when the rates come down because the prices are going to be higher. Just telling you that right now. Those rates get down to 5.5% on a 30-year fixed rate mortgage, forget about it. Price is going up 20%, I promise you. Why? Because you got millions of people who can't buy at 6.5%. But if that thing come down to 5.5%, oh, that's going to have millions of people flood into this housing market. 1 to 4 family dwellings, millions of people are going to flood in when that rate come down 1% to 5.5%. That thing gets down to 5.5%, millions of people are going to be looking to buy. And that's going to run prices up. Too late then. Too late. Right now is the perfect opportunity, right? All right, last thing, let's cover what's going on in the stock market this morning. And then we're going to get up out of here. Let's see here. What do we got? Headline, S&P, little change to start the week as benchmark tries to build on records. See, they keep talking about records for this S&P thing, man. I mean, every week is a record. And the rates ain't even down yet. Every week is a record. Crazy, ain't it? Every week is a record. Here we go. S&P 500 was little changed on Wednesday as traders start a holiday shortened week. So we got Juneteenth on Wednesday. Markets closed. So that's a little weird to have it in the middle of the week, but we got Juneteenth on Wednesday. So the market will be closed. The broad market index lost just 0.1% while the NASDAQ hovered near the flat line. The Dow lagged, falling 85 points. Amazon, Alphabet, Meta slipped slightly while NVIDIA advanced. Verizon led the Dow losses, pulling back 1%. The major averages were mixed last week, with the blue chip Dow posting its third losing week in 4, while the S&P and NASDAQ rallied to record highs and notched their 7th up week in the last 8. What's doing that? Tech companies. Tech. Tech is driving the S&P. Tech is driving the NASDAQ right now. That's what's happening, right? I think that will continue with this AI revolution. It will continue. More and more companies that can borrow money cheap to invest in their artificial intelligence platform, guys, it's coming. As soon as those interest rates come down, you're going to have so many companies. I'm talking about in every industry. They're going to want to bolster their artificial intelligence platforms. A lot of companies can't afford to do that now because interest rates are too high, and a lot of companies borrow money to finance that growth. They can't do it right now. Everybody's not Apple or Microsoft or NVIDIA with billions of dollars sitting on their balance sheet unencumbered. Most companies don't have billions of dollars sitting on their balance sheet in cash. So what do they do to grow? They go borrow cheap money at 3%, 4%, and then they invest that cheap money into growth that will return 10%, 12%, 13%. That's how they make money. Most companies don't have billions of dollars on the balance sheet. I hate to tell you, they don't. So anytime you got a revolution like what's happening with AI, I keep telling y'all, when they take those interest rates down, it's gonna unleash something you've never seen, because every company who has aspirations of being a better company in the future, they're gonna wanna build out their artificial intelligence platforms. They are. That's where the $3 to $4 trillion is gonna come from. You're talking about large cap, mid cap, small cap, private companies, not even public companies. All private companies are going to want to build it out. And guess who's leading that whole charge? NVIDIA, Microsoft, Meta, Amazon, Alphabet, Tesla. Why do you invest in the Magnificent Seven? That's why. Pretty simple. This stuff is not rocket science. You put your money where the growth is, period. End the conversation. I don't need to know everything about those 7 companies. They're the companies that are growing. Why would I put my money with the companies that are growing? I don't want to put my money with a company that ain't got no proven track record of growth. I don't care what they do. I need to put my money with companies that have a proven track record of growth. That's how you get rich. That's how you build wealth. Major averages mixed last week. This week, investors will assess if that rally can continue, with cracks emerging in the market outlook. There are really these 2 themes investors are trying to play this year. One has been the singular AI theme. Then one has been this idea of manufacturing, reshoring, and frankly, continuing strong economic growth. We are seeing a little bit of weaker economic data, and maybe you're getting a breather or a sigh that perhaps this re-acceleration from a manufacturing and industrial perspective is slower to move than what we're seeing from an AI standpoint. This week will be a holiday shortened week, and markets close Wednesday for the Juneteenth holiday. Investors are monitoring May retail sales data due out on Tuesday, which is tomorrow, as well as home sales and housing starts data later in the week. Lennar, Kroger, Darden Restaurants, and CarMax will report quarterly earnings. There you go, guys. There's what's happening right now on a Monday in the stock market. That's what's happening right now on a Monday. But quick little teaser. We'll cover this tomorrow. Quick little teaser. NVIDIA alone accounts for more than a third of the S&P 500 gains this year. So a third of the gains, we don't get into that today. We're going to get into that tomorrow in more detail. But a third of the S&P 500 gains are attributed to the big boy, 900-pound gorilla, NVIDIA. We'll get into that tomorrow. Appreciate y'all, man. Hey, get down to the description box. Click on them links, man. If you want to go check out my website, www.richardfain.net. Hey, second link down in the description box. Go check out my website. Go check out them digital products. Hey, man, we got everything from credit repair, credit restoration, improve your credit score, all the way to how to invest in the stock market, right? We got mental, millionaire mindset. You know, We got all kind of stuff in there, man, that'll help you with your mental, that'll help you with your information to be able to execute everything. Go check out the website, www.richardfain.net. While you're over there, consider joining the paid private mentorship group. That's the only place on the internet I mentor, is in the paid private mentorship group through my website. I don't mentor anywhere else other than there. So if you want to be a part of that, put me on your financial team, put me on your gang of 5, have access to me 365 days a year, 7 days a week. Hey, and get access to another 600 people that we already have in the private mentorship club. Hey man, get over there. We'd love to have you. We'd love to have some financial fellowship with you. We want to surround you with people who are going in the same direction you're going. So consider that. Consider it. Like I said, over 600 people have already done it in the first couple of months. Like I said, we're going to build this thing out to at least 1,000 folks. And then I may cap it. Cap it at 1,000, that's it. Because that's manageable still. And it's just not me. It's other people in there from all walks of life, all age ranges, men, women, people identify as other stuff, everything. Everybody over there. But we got one common goal, getting the freedom. Everybody's in agreement on that. We're in agreement that we're going to get the freedom. We're going to help each other get there. We all agree on that. Now, we all might have different ideas of what freedom is for us, and that's okay. That's healthy. We're not trying to be experts over there. We're not trying to tell people what to do. We're just there to encourage and let people know that somebody got their back. When your family or your friends or your boss or the society in general is telling you you can't build wealth, these people are telling you you can build wealth. So check it out, man. Check it out. Website, www.richardfain.net. Second link down in the description box. Moomoo brokerage account. That link is down in the description box. First link. That's the brokerage app that I'm using for the next 10 years to quadruple my net worth. Now, this conversation is for beginners. For people that already got their brokerage accounts and they love their brokerage account, they're doing great. Hey, this conversation ain't for you. It's for people who are saying, hey, I want to use the same brokerage app you use, Richard, because I want you to go ahead and send me those tutorial videos. And I want to also be able to have continuing dialogue with you about what I'm doing. Then I suggest you get down to the description box, click on that Moomoo link, put your $100 in there. They're going to give you 5 free stocks. You put $1,000 in there, they're going to give you 15 free stocks. And then you're going to send me an email and say, Richard, I've opened my Moomoo account like you promised. Send me those tutorial videos. Also send me your wealth transfer blueprint 1.0, 2.0, outlining all the investments you're going to be buying, including your NVIDIA strategy. And I'll send it to you. All information for you to be able to get yourself locked and loaded and off to a good start. Use this week as a way to get yourself ready to go, get your money deposited in your account, get your strategy down, and then by the tail end of this week, when we come back off the holiday, the tail end of the week, you're ready to lock and load. You're ready to go buy your assets. And then from there, you're going to buy those assets every single month, like clockwork. Remember, not going to worry about the pennies. Not going to worry about the stock price fluctuating a little bit, because right now ain't where we're going to make our money at on this stock price we're at today. Where we're going to make our money is that stock price 2 to 3 years from now. That's where the money is at. That's where the life-changing financial opportunity is. Not today's price at $132 a share. Who cares? That's not life-changing money for most of us. The life-changing money comes in 2 to 3 years or 5 years when this stock runs, which I think it will, but it may not. I'm not a financial advisor. I'm not trying to tell you what to do. I'm just giving you my opinion based off data that I've just taken you through that I research. It's just data. It's just my opinion. But I believe the wealth we can capture over the next 3 to 5 years in this stock or in the stock market in general over the next 3 to 5 years is significant. I think it's significant. That's where the life-changing financial opportunity is. It's not in the stock price today at 132 or whatever it is. I don't even know what it is. Whatever it is today, it's not that. Is what's life-changing for us. Where is it at right now? Okay, it's 130 right now, so it's down, right? So all of y'all that were, oh, no, I want to buy it less than what it was trading at on Friday, there's your opportunity. It's at 130. Again, 130, 120, 115, 110 is not life-changing for most of us. What's life-changing is if this stock can, or if this company can go from let's say $120 a share, and over a 5-year period, it goes to $520 a share. That's where the money is. That's where the life-changing event happens for us guys. But we got to be patient, consistent, right? And continue investing. Again, you have to make that decision. I can't make it for you. I will continue to invest in this company, in the S&P 500, in the Magnificent Seven, in FTEC. I'm going to continue investing for the next 10 years because I need to quadruple my net worth. But if you want to get down in that description box and click on that Moomoo link and join me and get those 5 free stocks with your $100 deposit, 15 free stocks with your $1,000 deposit, and then you're going to get those tutorial videos from me because I'm going to email them to you. When you email me through my website, you're going to email me and I'm going to, boom, instantly get them to you. And then all you got to do is take time out, give up some of this other stuff over here that you're being a consumer, become a producer, take some time out, go through those videos. It's going to walk you through how to use the Moomoo app, how to make trades. It's going to tell you where everything is in the app. Now you're ready to go. You're locked and loaded. You're ready to start buying assets. And then if you want more mentoring from me, get over to the paid membership group, sign up, pay your money, and now you got access to me for questions and things like that. That's it. That's if you really want the opportunity to build wealth. If you're saying, Richard, I don't need any of that, perfect. Do what you're doing now. You get the same results you've been getting. If you're happy with your results today, all I just said don't make no sense to you. Disregard it and click out. If whatever you're doing today is getting you where you need to get, guys, keep doing that. But if it's not, what's the definition of insanity? I continue to do the same activities over and over and over, but I expect different results. You don't get different results until you change the activities. All right. Appreciate y'all, man. Lock it in with a thumbs up before you get out of here. I gotta go. It's after 12 o'clock. I've kept y'all long enough, but appreciate you. Thank you for rocking with me and listening to my info. Hopefully this info gives you a little bit more perspective on what's happening according to Richard Fain. Just my opinion, not a convince you channel. It's an opinion channel, not a convince you opinion, right? Just my opinion. You may disagree, but that's okay. I still rock with you. I still love you no matter what. I'm still doing what I'm called to do, and I'm loving it. So lock it in with a thumbs up if you appreciate that. And guys, check it out. I'll be back tomorrow, 10:30 a.m. Eastern time with some more information to help you what? Collapse time frames, execute, get to the pot of gold at the end of the rainbow, right? I still am here to do that, and I'm going to continue to do that every day that the Lord allows me strength to do it, right? I got 10 years left on this platform, so I'm going to be here every day, get used to it, right? What I will ask you to do is plug in. Don't just get this information. Don't just sign up for Moomoo and get the tutorials, and then all of a sudden you out here, by yourself, flying solo. Plug in every day to this YouTube channel, 10:30 a.m. Eastern time. Plug in. And if you can't plug in exactly during the live stream, this thing is on video loop after the live stream. So when you're at night, before you go to bed, you want to get a little education on your mind to go to sleep with that, plug in. You got to plug in, guys, somewhere to get information to keep feeding the filter system, the financial information to feed the filter system. You got to plug in somewhere. Why not here? If you like my style of delivering information, hang around. If you don't like my style, I get it. There's a million other guys out there and gals out there. You may find your style. But for y'all that like my style, the way I do it, the way I deliver it, I keep it 100. I don't hold no punches. I just tell it the way I believe it is. If you can be okay with that. See, a lot of people can't deal with that. They can't deal with somebody telling them the truth. They can't deal with it. I get it. That's the society that we live in, right? We don't want the truth. We want this make-believe world. That's what we want. We don't want no truth. We want all make-believe. This la-la land. No, I'm going to give you the real deal Holyfield. So if you're going to watch this channel, you're going to get the real deal Holyfield every single day. And I hope you appreciate that. Hope to see you over on the private mentorship club through the website. I hope to see you. I hope to see you sending me an email through the website saying, Richard, I'm rocking with you. I opened up my Moomoo. I funded it. Send me that information so I can get going here. I ain't got no time to waste. No time to waste. I need to get going. I hope to see that email from you as well. Thoughts become things. Say it in your mind. Hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. Appreciate y'all with the super chats. Appreciate y'all with the super chats. Thank you. Peace.